As widely expected, the Bank of Canada lowered its key interest rate by 25 basis points. Joining me now to discuss is James Marple, Associate Vice President and Senior Economist with TD Bank Group. And James, what's your reaction to the decision? Any surprises for you?
Well, not really. The Bank of Canada is looking at the same data we are. We had inflation data come out yesterday that showed at least a little bit of a deceleration in some of the bank's core metric. Obviously, the headline fell on lower energy prices at 1.9%. The Bank of Canada mentioned inflation in their statement, obviously saying that inflation is running around the 2.5% mark. So it's not quite at their 2% target, but it's certainly within their target range. And looking at kind of the broad range of data, obviously GDP declining in the second quarter, the labor market showing losses in jobs, and the unemployment rate pushing higher. A cut made a lot of sense. And yeah, I mean, we'll obviously be continuing to watch both the data and their comments today and forward.
And as you mentioned, the statement today highlighted the risks to the labor market and uncertainty around trade. What does this mean for interest rates going forward?
Yeah, I think they probably still have a cut ahead of them. I mean, again, they're going to be trying to monitor that inflation versus growth balance, but it does seem like there are a lot of downside risks that are really playing out in the Canadian economy. They mentioned, obviously, the tariffs that Canada removed some of the counter tariffs on the U.S. That reduces, at least in the near term, some of the temporary price pressure, and they can focus perhaps more on supporting growth.
Now, I want to talk about GDP because, as you mentioned, we got a weak Q2 GDP print, and there's been a lot of talk about potential recession. What's your outlook on that?
Well, we typically, often talk about recession in this 2 quarters of decline, and we obviously have had 1 quarter. I would say the third quarter, we're not seeing anything like gangbuster economic growth. It's going to be pretty soft. So whether it's a decline or a soft growth after a decline, it feels pretty recessionary. And I think the other thing that's important is the labor market is really slowing. There's been, job losses over a couple of months. We've seen the unemployment rate clearly tack quite a bit higher from where it was over the past, it's really been something that's been happening over the past few years. So we're in a very slow economic growth environment, and one in which labor market outcomes are deteriorating. Whether you call it a recession or you call it very weak growth, it doesn't feel very good.
Okay, now we also have a date for the upcoming federal budget. Do you see any implications, if at all, to Bank of Canada policy rate going forward?
Well, I think they will be looking forward to some of the details. We've heard a lot of announcements and some of these projects that the government wants to support. But we've also heard that they are going to focus on restraining spending and cutting staff. So I don't expect to see anything broadly stimulative in the near term that would cause the Bank of Canada to really have to change course. I think we are going to see a lot of announcements and plans for how we adjust to this brave new world and the protectionism that we see in the U.S. But I think the Bank of Canada we'll like to see the details, but it's not going to change the path of monetary policy.
Okay, so looking ahead, what will you be watching closely as the Bank of Canada considers its next move?
Well, basically all the things we've talked about. So obviously the inflation data continuing to show some slowing and moving toward the Bank of Canada's target. Going to be watching the labor market. I mean, as the Bank of Canada mentioned, we've seen weakness in trade-related sectors, but we're also seeing a slowdown outside of that. So watching the trends there and watching the GDP data and data in the housing market, which has been one of the brighter spots for the Canadian economy, but kind of all of that. And then the details we get from the federal government. Do we see the budget? Do we see the budget actually move forward on some of these plans that changes, if not the near term, then at least the medium-term trajectory of the Canadian economy?